Scott, thank you so much for joining. We really appreciate it, and look forward to having a good conversation with you.
Thanks for having me.
No, it's a real pleasure, and especially somebody who knows something about how state infrastructure banks work. One of the things that we've been spending a lot of time on since March is trying to figure out how you can identify engines for additional infrastructure investment in the country. And one of the most interesting ones from my point of view are state infrastructure banks. So if you don't mind, we'll jump right into it. I have a couple of questions for you. If you could give us an overview of your bank, and I guess the sources and uses of funds is what I'm trying to get my mind around in terms of how you guys operate, because you, as far as I can tell, have one of the best functioning state infrastructure banks in the country.
Well, thank you. I'm happy to go into that. And just as a caveat, I joined the California Infrastructure and Economic Bank back in late January of this year. And so all of that great tradition and history that we refer to happened prior to my arrival. I'll just try not to mess things up while I'm here. But essentially, the iBank, as we're known, was formed by statute back in 1994. It became funded and operational around 1999, and in a couple of general fund allocations in 1999 and 2000, it received its sources of seed funding from the state of California. Subsequent to that, it's been functioning on its own 2 feet, and we don't receive annual allocations from the state's general funds. We go to the bond market for our sources of funds, and we rely on the profitability of our portfolio and our activities and fees from our transactional activities as well. But right now, we're California's only general purpose financing authority. We've to date participated in about $40 billion of financings and guarantee activities, credit enhancements, bond activities of all types. And our mission is to promote a healthy climate for jobs, to contribute to a strong economy, and to improve the quality of life for the California communities. And that encompasses both infrastructure and economic development.
Yeah, that's great.
And so, like, I could get into our programs, but I'll turn it back to you.
So no, I'm really interested in, and my understanding is, I don't know if this is right or not, but you also have some pension funds that invest in your bonds. Is that right?
I wouldn't be surprised. I haven't looked into the composition of the bondholders and how they've traded. I wouldn't suspect that there would be a large proportion of California pension funds as non-tax entities. It wouldn't be probably to their advantage to hold the tax bonds that we've issued in the past. But going forward, we're in the process of considering a taxable issuance, and certainly we would hope that the pension funds would participate in those offerings.
Listen, tell us a bit about your career. How'd you get where you are right now? I mean, it's a really interesting job you have.
Yeah, thank you. No, I kind of bounced my way around the finance sector since the mid '80s.
Wow.
And so I've historically been a generalist in all different types of financing activities and industries. I started out in the late '80s, a Wall Street investment banker, really gravitated towards what became known as the fintech sector, and I was one of the early fintech bankers on Wall Street. And from there, I gravitated towards becoming an investor, and so launched a venture fund focused on financial technologies, helped launch a private equity buyout fund, part of a founding team of a hedge fund, launched a crowd fund, later on launched a couple of international development funds as well, participated in that type of activity. And so I've been all around various avenues and sectors of finance. In that, I've always looked at it in terms of having a career where I've been able to leverage my skills and experience to structure really unique financial instruments, unique financial facilities to achieve a larger purpose.
Yeah.
And so I'm delighted to be at iBank because I think it's a fantastic platform to help the state of California and its citizens and to help achieve the state's goals, the latitude and flexibility that this institution has and the foundation that we rest upon. It was just a really unique opportunity that I gravitated towards here.
Yeah, it's fantastic. So this is your first participation in public service.
So I served a couple of years in the Obama White House as a Presidential Innovation Fellow for the Obama White House and was detailed out to be the kind of senior venture and investment professional advising USAID as they
Okay.
were launching innovations funds around the world to really solve big global development problems, energy, waste, food, healthcare. And so those were, yeah, so that was a public service stint. This is, I guess, my second meaningful public service stint.
Well, we should talk about that sometime. We do a lot of work overseas, and so it'd be really interesting to get your perspective on that.
Sure.
Let's talk a little bit about the challenges that you face, I guess, because of COVID, right? How has COVID changed your job, and maybe how has it changed the way you look at the infrastructure and the other investments that you need to make so that California can be a healthy economy?
Sure. I mean, it's changed a great deal from my vantage point, and it's also not changed a great deal. And so
Okay.
when I stepped in late January, it was a few days after the governor had announced that with the surplus funds of the state of California, that he wanted to allocate $1 billion to iBank to launch the Climate Catalyst Fund.
Okay.
And so it was really a period of looking at opportunity, looking at available resources for growth and building off of this platform to provide new programs, new services to serve the state of California and achieve the state's goals. It was about a month and a half later when the COVID crisis reached a point where it was clear that all of that was off the table.
Yeah.
And the nice healthy surplus that California was planning to experience was going to be a $54 million deficit.
Wow.
And from that point on, it became more in terms of looking at the changing needs of the state and its constituents and finding new programs and solutions and initiatives and taking the tools that we had available to refashion and make those available to serve the new environment.
Okay.
And so, hey, it was one coming in a period of growth and available resources to scarce resources and
Yeah.
not thinking about growth, but thinking about survival, the state's survival, the small business community's survival, the survival of the municipalities, and doing what we can with our tools and our skill sets to help all of those constituencies in California. So the nature of the goals changed. But frankly, we kept moving forward and just kind of shifted and retooled.
That's great.
And so we started thinking about small business solutions, and we
Okay.
launched the COVID Disaster Relief Loan Guarantee Program in a matter of days, actually. And so we were able to get that off the ground. We continue to look at new solutions for small businesses. We're in the process right now of launching the California Rebuilding Fund in a public-private partnership. At the same time, we had to really focus on our entire portfolio. And as the municipalities started having different plans, different kind of timeframes for launching infrastructure projects, and there was, for a while, everything was kind of off the table.
Yeah.
And based on the rate environment, the marketplace was non-existent for a while. And so but as things settled down and people started to understand kind of the new timeframes, the new normal that was incumbent upon them, that we all had to make adjustments. And so iBank started adjusting, and we started looking at the stress that was being experienced in our portfolio. We looked at all the federal programs and how they would come to bear to help weather the storm for the borrowers of California, the municipalities. And so we became very focused and engaged both legislatively in the state, really closely following what was going on in DC, and continue to do so because it changes every week, right? And so we have to be on our toes. We have to
Right.
be adaptable, flexible, be thinking ahead. We can't just be sitting back, just
You
doing the
bet.
same things that we've done historically, as successful as that's been.
That's really good advice, being on your toes and thinking ahead. I run a small business, and that's what I've had to do the whole time. That's the lesson I've learned through my whole career. I think I've gone through 5 recessions, but this is the toughest one.
Yeah, no, yeah, when this started, the market's started going nuts in March. I talked to our staff about, hey, I experienced the 1987 Wall Street meltdown. I watched the prior recessions of 91, the Russian currency, Asian currency crisis, the Russian currency collapse in 97 and 98, and the dot-com boom
Yeah.
and bust in 2000, and the real estate collapse of 2008. And this is something else. I mean, this is a whole different scale and nature, and the duration of the consequences will be more long lasting.
Yeah, it's amazing. I just, and then to put that into perspective, I just got off the phone with a friend of mine in Argentina. Now that's
Sure.
so when we talk
They
about in
know
terms
all
of
about
business,
booms and busts.
nothing compared to what they've been through and what
No,
they're about to go through. So it's
no.
tough. It's tough. Hey, listen, another issue for me is trying to get a sense from people like you about how you see the infrastructure market changing because of technology innovation, right? And digitization, because we see, just to give you a sense of how we see it, the ability to splice infrastructure solutions on brownfield assets is phenomenal in terms of driving new performance. And then in terms of greenfield projects, there's a lot of questions about what you need to build, how you need to think about it.
Yeah, I mean, I come from Silicon Valley roots, and so in the tech sector, we're always thinking about the future and about the use of and application of technology. But before that, on Wall Street in the financial sector, banking the large banks, that was considered back in the mid 90s the dinosaur industry, right? Banks and insurance companies. Literally, I actually wrote a paper about how, hey, these entities are either going to be dinosaurs and go extinct, or they're going to have to adapt, and they're going to have to embrace technology instead of spurning the technology and sticking with their 1960s mainframe systems.
Right.
And now today, the financial sector is one of the most cutting edge, futuristic industries in the world. Right. In fact, I think there are more currently technology unicorns in the financial service sector in the world than in any other sector. And
Really?
so, yeah, and so there they are. They're embracing the change. By virtue of the financial sector having the benefit of not having to deal with the hard assets. It's all about bits and bytes. They can transform quickly, and they have, and they've stayed ahead. And those that didn't are gone, and those that are continuing to grow and dominate have embraced technology. And so I look at the infrastructure sector and I say something similar. I'm like, it's not the first place you go to think about the applications of the cloud and big data and technology, but no, absolutely. The amount of efficiencies that can be gained, the cost savings that can be had by using and applying technology for design and development and for managing a project during its lifetime, and to be planning and forecasting future uses. And it's critical. And I think everybody should be thinking about how they can, for the sake of resiliency, for the sake of just being able to move quickly to
Yeah.
adjust to a rapidly changing world. I mean, you can't just build something and just plan to run it the same way for the next 30 years. The world is going to evolve,
Yeah.
and infrastructure has to evolve with it. And using technology to plan for that, to adjust to that, I think will be critical.
Yeah, no, I think you're absolutely right. I like to hear that. Let me ask you just a parenthetical question, because I'm just really interested in your response. What's the coolest infrastructure related to technology that you guys are investing in right now?
Well, so the coolest
Smart
infrastructure.
cities, driverless vehicles, autonomous vehicles.
No, so we're doing a couple of interesting things through our guarantee programs, and we have a relationship that was formulated prior to my arrival, but that's just really got going recently with the Bay Area Air Quality Management District, and so we provide climate tech guarantees,
Really?
and one of the approvals from just a couple of months ago, I think it was our probably 2 months ago, was for a hydrogen ferry in
Huh.
the Bay Area. And so it'll be one of the first of its kind. It'll create jobs. It will
Yeah.
basically replace, the smelly diesel engines with a hydrogen powered uh, ferry crossing the bay. And
That's
so, and we've got a couple of these in the pipeline, and these are a little bit more emerging tech, and that's one of the reasons we've had a clean program in the past for kind of climate oriented borrowers, but those are focused on municipal projects that were investment grade because they're backed by our AAA bonds. The reason it was necessary for us to really drive the launch of this climate catalyst vehicle that was approved in this 2021 budget was to open up that aperture and to be able to think about different sponsors,
right.
private sponsors, to be able to think about different stages, not just fully mature technologies, to be thinking about different size and scale and unproven business models.
Right.
And so it allows us to take a little bit more risk and have a wider aperture to try to get some of these things off the ground and moving, because that's one of our kind of preeminent goals as iBank, to help get things started that wouldn't have happened otherwise, to help
Yeah.
drive more private capital into these marketplaces and to take it from there, because we'll never have anything close to the amount of private capital that's involved. But if we can take a little bit of that risk or share a little bit of that risk to get them started and to prove some of these models so the private markets can come, then I think we've done a good job.
That's great. I love to hear that. And so you really do see yourself as a catalyst for private investment into infrastructure.
Yeah, I believe so. I think that's the best way to make things happen at very large scale,
Yeah.
because at the end of the day, we're still a pretty small bank,
Yeah.
right? We
Yeah.
have a limited balance sheet. We can go to the marketplace and raise more bond capital, but it's in small increments.
Right.
We're never going to be in the hundreds of trillions of dollars of private capital debt, capital that's available, or the $80 trillion of
Yeah.
public sector equity that's available for all kinds of purposes. And so we need to do things to attract and spur some of that investment.
Okay. Now that's fantastic. Last question, and thanks for your time. Really appreciate it. You guys are successful. You're a really interesting state infrastructure bank. What kind of, lessons do you have for the other banks around the country? Because at a time like this, you really do need somebody, an institution, to catalyze more investment, especially in infrastructure, which has been particularly hard hit. And when you talk to CEOs of infrastructure companies, engineering construction companies, they say, look, my contracts now are fine, but next year and the year after, super worried about those. And so there's a real concern all over the country. And it's one of the reasons I really wanted to talk to you and appreciate your time is because state infrastructure banks, I guess they're in 37 states, but very few of them have the sort of the heft that you guys have. So what's your Moses from the mountaintop speech for the rest of the people?
Well, my Moses speech is to look at the efforts and accomplishments of my predecessors, because this wasn't built overnight, right? We've been around for a quarter century,
Okay.
and it's about being slow and steady. It's about starting and building really strong core offerings and demonstrating our creditworthiness, demonstrating our ability to be great stewards and fiduciaries of public capital, and doing it responsibly, but yet at the same time, not just sitting on our laurels. It's always building the core offerings, having a steady business. You can't just be in and out of the market, based on administrations, based on the budget from the past year or whatnot. you have to have a strong, stable core offering that's always out there, available to the marketplace, and at the same time, always be looking around the edges to innovate with the times. I mean, we can't say yes to everything, obviously, but we can't just sit also passively waiting for the phone to ring for one of our, existing programs. That's not really providing the type of service that we've been given the opportunity to provide. And so we have to look forward. We have to adapt. We have to think about the customer's changing needs and the state's changing goals and evolving goals, and thinking about, okay, we have a full breadth and suite of available tools and expertise, and a staff that is fabulous, and they're able to think about bringing what we have together and say, how do we fashion something for this environment? And that's what led to both Climate Catalyst and the California Rebuilding Fund. These are things that hadn't been conceived of before within our confines, and we said, this is what we need now. This is what California needs right now, and let's go make it happen. Whether it requires some legislative adjustments or some funding adjustments and contributions, we'll do that. But at the end of the day, it's both slow and steady, build up deliberately, responsibly over a long period of time, and always be looking forward, and we'll always be thinking about, okay, how are things evolving and changing so we can stay ahead of that to better serve the community.
That's fantastic. How many employees do you guys have?
We're a small firm. We have 42 roles, and a handful of those are available right now. And so if you know great individuals, please send them our way. A couple openings are posted on our website.
I'll do it. Hey, listen, this has been a great conversation. I really appreciate your time, and thanks so much, and look forward to actually meeting you one of these days.
Yeah, no, absolutely. When we can do that, I look forward to it.
All right. Thanks so much, Scott. Talk to you soon.
Okay.
Bye-bye.
Take care.